Bitcoin price chart suggested that $52,500 should be a very challenging resistance levels to the flap. A sharp reversal in the price of Bitcoin out of an otherwise bearish technical setup has raised its chances of reaching $58,000 in the quarter 2. Hello and welcome back to the Crypto Live. If you haven't already, consider hitting that subscribe button and turning on post notification. On the daily time frame, Bitcoin broke out of its ascending triangle on March 27th to the upside, bringing the much anticipated level of $50,000 within its range. Interestingly, ascending triangles are the continuations patterns, meaning they typically resolve by sending the price in the directions of its previous trends once it breaks out of their tightening range. Bitcoin, which was trending downwards before forming an ascending triangle, avoided further downside. Instead, it managed to break above the pattern's upper horizontal trend line around $45,000 and followed the move upwards by hitting almost $47,700, a level lost claims on January 2 this year. This turned out to be among the few cases wherein ascending triangles emerge at the end of the downtrend. For instance, Bitcoin underwent a sharp upside retracement from $3,100 to $14,000. After pointing a similar triangle pattern between December 2018 and April 2019, as battery market analysis pattern branded noted on March 28. The fractal rises Bitcoin's potential to undergo a decisive breakout of its reversal ascending triangle for an extended price rally towards the level that is a length equals to the maximum distance between the triangle's upper horizontal and the lower rising trend line, around $58,000 as shown in the chart. Independent analysis dives the way, meanwhile anticipates Bitcoin to rally towards its current record high at $69,000. The analysts turn out to the bullish forecast based on the broader ascending triangle pattern coupled with Bitcoin's logarithmic support level on a weekly scale. Nonetheless, his setup also posed the possibility of the Bitcoins crashing back below $40,000 after failing to break $69,000. Bitcoin ascending triangles in the both shorter and the longer time frame charts presents extremely bullish outlooks. However, immediate downside risks are still present when consideration critical weekly moving averages and the Fibonacci retracement levels. Notably, Bitcoin's ongoing upside move occurred after it tested its 100-week exponential moving averages, reportedly as spot. Meanwhile, a 0.23 Fib line of the Fibonacci retracement graph drawn from $69,000 swings high to $26,000 swings low acted as an additional support. The $26,000 level coincides with the 200-day week EMA. Interestingly, the rebound appeared similar to the price action witnessed between November 2019 and January 2020. Back then, Bitcoin price really exhausted upon reaching the 0.61 Fib line in February 2020, leading the correction towards the 200-day week EMA a month later. If Bitcoin repeats the same move in 2022, the Bitcoin USD pair could reach its current 0.61 Fib line near $52,500, only then to correct back towards the 200-day week EMA near $26,000. Conversely, a decisive move above the Fibonacci level could trigger the ascending triangle setup. The views and opinions expressed are solely those out of the author and do not necessarily reflect the views of the Crypto Live. Each investment and trading move involve risk. You should conduct your own research when making a decision. Analysts says that Bitcoin surge above $48,000 is the clear macro trend change that traders have been waiting for, but our new all-time high on the way. Cryptocurrency investors were in the high spirits in March 28 as the weak long-term melt-up across the markets extended another day, with Bitcoins relying to $48,000 and Ethereum trading above $3,400. Data from Cointelegraph Markets Pro and TradingView shows that after a brief pause on near spots at $47,000 in early trading on a Monday and afternoon, wave of buying help left Bitcoin above $48,000, and bulls are identifying $52,000 as the next stop. Here's a look at what several markets analysts are saying about this latest move for Bitcoins and what could come next as the bullish narrative continues to gather momentum. A look at where Bitcoin might be headed was provided by analysts and the anonymous Twitter users Nunia Business, who posted the following chart outlining a possible move above $54,500. A similar outlook moving forward was expressed by technical analyst Crypto Yoda, who posted the following chart highlighted a nice breakout of the bearish structure. Further insight into Monday Bitcoin price action was touched upon by market analysis and the anonymous Twitter user Philb, who posted the following chart showing the strong weekly closed by Bitcoin with closed above the 20 WEMA and 50 by 100 DMA. Analysis of the long-term price performance of the Bitcoin was discussed by the crypto trader Jordan Lorenze, who posted the following chart suggesting that the Bitcoin bull run that began in early 2021 is still going due to the extensions of the 4-year cycle. The overall cryptocurrency market cap now stands at $2.1 trillion and the Bitcoin dominance rate is at 42.1%. Data from Bitcoin's mere multiple suggested low risk return conditions at current level, but macro conditions still travel long-term optimism. Bitcoin is attempting to reclaim a key long-term moving average, but the time to buy is before, not after, one metric hints. In a series of tweets on March 9 on chain monitoring resources econometrics eyed a classic entry of Bitcoin USD as flagged by the mere multiple. Bitcoin price strength has endured as the week gets underway, the largest cryptocurrency putting on its highest levels of 2022 overnight. Some key moving averages has also fallen to bulls, and whilst the trend is not yet definitive, optimism is increasing that Bitcoin could even challenge November's all-time high based on that fact. Next in line, meanwhile, is the 200-day moving average, currently at $48,300 and just tapped in the past 24 hours. The 200-day DMA is a key component of the mere multiple metric, which measures spot price ratio to it in order to determine potential profitable market entry points. A score below 2.4 on the multiple tends to signal good long-term rewards for investors. Having bottoms in January at around 0.36, as trends has reversed the sense as of the Tuesday, almost right at the 200 MA. Bitcoin has a mere multiple score of 0.98. That's a good time to buy. Econometrics argued in comments, adding that even if a breakout from the 200 MA ends up being a small trap, loss in such situations having historically been small. So, even though the macro backdrop isn't looking good, this is a buy. A further support continued. Those macro tensions, which include inflation and the central bank's attempts to fight it with monetary policy tightening, remains a key topic of the debate this month. As Cointelegraph reported, multiple analysts have warned that the outlook could still run firmly against Bitcoins and the risk assets more broadly as rates rises and a stagflationary environment emerges. The sense that a sustained rally in Bitcoin cannot possibly form the new paradigm is evident among professional traders as derivative markets funding rates remain flat despite weekly gains approaching 20% for Bitcoin USD. Excessive long-based derivative market speculation is near non-extant currently, and Lester Dylan Leclerc noted in a Twitter thread on the topic Monday. Thanks for watching today's video. If you haven't already, consider hitting that subscribe button and turning on post notification. See you next time.